Casey, if you could, how would you summarize your experience in real estate and why it's so important to you?
Yeah, it's evolved so much over the years. It's started from 14 years ago, buying my first rental property in Laramie, holding that asset to this day, all the appreciation, all the cash flow that's happened, being able to refinance that asset and go buy a second property. It's just really, it's changed my life. I mean, it's obviously changed my life to where I worked in oil and gas for the first 12 years, and I was able to actually leave that job because I was able to grow it so much, and really just being able to run your own business, being able to, and there's so many different facets of real estate, from being able to find deals and fix and flip, being able to do rental properties, being able to like renovate and like transform a property. It fulfills me in so many different ways, and there's just so many different ways to make money in real estate, which I probably is my most exciting thing. Is I can make money wholesaling it, we can make money fixing and flipping, or we could just be buy and hold investors, and a ton of people do that, and they're extremely wealthy just doing that sole strategy. So many cool strategies. I love that we're able to do so many of them.
So after investing for over 10 years, you obviously, live out real estate in your daily life. What does it look like when you start to think about, maybe you take a step back and start to think about generationally what the impact of real estate is going to have for your kids, grandkids, all the way down the road? What does that look like for you when you take a step back from it and look at it maybe at a little more, 30,000 foot angle?
You bet. And it's hard too, because a lot of times you're just like, hey, I'm worried about how can I increase my monthly cash flow by buying another property, or how can I go do a fix and flip that'll bring in some more active income. But what I'm not often thinking about is all these rentals that I'm accumulating, and I'm paying those down every month and every year, to where if these are on 15 or 30-year mortgages, these properties are eventually going to be completely paid off. And I'm going to have all these assets that are, again, in time, they're all going to be paid off. And once they're paid off, the debt service drops away, and you have that much more cash flow. And and the other piece is appreciation. Like my whole portfolio, if I'm just getting regular normal appreciation of 3 to 5%, lately we've gotten 10 to 12% a year, but my whole portfolio is appreciating by that amount every single year. And you don't necessarily see that as money coming into your bank account, but it's creating this wealth to where I know I'm going to look back. I mean, I've had mentors that have talked to me like, Casey, you're doing such a special thing because you're getting all these rental properties, and you're going to look back at 10 to 15 years when these are all halfway paid off or maybe completely paid off, and you're just going to have all this wealth that's accumulated. And again, I look at it on a day-to-day level. Hey, how much cash flow is it doing? How am I writing off taxes? All the other different benefits of real estate. But if you play the long game, it is very hard to lose. And you just look at what's happened to people over time that have historically owned real estate and how it's transformed them. So sometimes I have to sit back and be like, hey, what is this creating in the future? And it's exciting. But to me, it's like, that's an added bonus. Like, my focus now is, again, cash flow, creating active income. And as that comes in time and in the future, that's just an added benefit that a lot of people don't have, because they might not own real estate or own an asset that appreciates like that.
So a lot of exit strategies, you have a lot of different basically game plans in real estate. How do you operate your businesses to basically be successful? Can you share a little bit about the businesses that you have in play and kind of how they operate together?
You bet. I mean, fundamentally, it all starts, and this is intuitive to any business. In marketing and sales, you've got to have leads, you've got to have a funnel, you've got to have deal flow. So it really all starts there, and we created that. It's been 4 or 5 years ago of how do we go direct to seller and find off-market deals. So that fundamentally really kickstarts the entire business, and really it's its own standalone business, to where we have WYO houses that finds properties, and they might be distressed, it might be a creative finance deal, multiple exit strategies, but ultimately you've got to be talking to sellers and finding deals. So that's where it all starts, right? And then the next kind of natural evolution was to do construction and do fix and flip, because a lot of people can find deals and sell them, and can be a very profitable source of income. But then what they're doing is they're selling to the flipper, and that's why we were able to, and that's really the business I've had going the longest, is finding properties and fixing them up. And we've really transformed that business by bringing in in-house contractors and having teams to rely on. Because I always say this, one of the most risky things in real estate, again, to me, it's one of the safest ways you can make income and earn a living and create wealth. But the biggest risk is always dealing with contractors. So we've been able to really mitigate that risk and control that by having in-house contractors. And then the last piece is now most people will then find a deal, fix it up, and then they'll go, if they want to keep it, they'll go hand it off to a property management company. But I've talked to so many people over the years, read a lot of books, and listened to podcasts, and like people in general are never satisfied with their property management company because they don't treat it like, they don't care about the property as much as you in general. There are some great ones out there, but we made that commitment. Again, this was right when, I've been managing property since I owned it, but I made a commitment like 5 years ago that, hey, we're gonna build a team that can manage our properties. And so that now has evolved into, now we can manage other people's properties, and we have really big plans to grow in that part of our business. But ultimately, I love that we can keep it in-house and we can control it. We can push rents if we need. We can manage our construction and our and just our capex and our expenditures. Like, we can control that because we're managing the property. We've got our own in-house contractors, and it just provides, I guess to summarize it all, it's so nice because we can control all three parts of the process, and we can derive income and profit and revenue from all three parts of the process.
That's awesome. So it sounds pretty robust. It sounds like a lot of operational activity going on, but you didn't start like this, right? You had to build it from something. How did you basically get your start to build this up? Especially if you can share your background as a W-2 employee, in a different industry.
You bet. I've been working for Shell, or I was working for Shell for like 12 years, from 2012 to just a year ago in 2023. I was working that W-2 job, and I was buying rentals when I could. I was trying to find contractors and manage contractors from afar when I could. And I was managing the rental properties from afar, but this was all me coordinating with other third parties and me figuring it out, me hustling while working a W-2 job. But the biggest kind of transformation I made was when COVID hit, and I was working with Shell. I share this story a lot, that when we were working for Shell, we cut like 40% of our organization, and everybody had to repost for their jobs. So everyone was sitting around trying to figure out, are we going to be laid off, and was reposting. But I would say the opportunity that came from that was I had a bunch of extra time, and plus we were shut down because of COVID. Everybody was at home. And at that time, I kind of had some time to think, and I had just read 4 Hour Work Week, and I was like, I'm doing all this. I can't scale this with me doing it all. And that's when I made the commitment to go hire my first virtual assistant, and I was able to start to delegate a lot of executive assistant tasks. And the other big part of my business, the first one I wanted to delegate, was property management, because I knew that I was managing properties sitting in Houston, Texas, in Fort Worth, and in Wyoming. Properties I was never seeing, but I was figuring it out on how to manage it. And I'm like, well, why can't I go train someone else to do that? So that was the first step, is hiring a virtual property manager to help manage my assets. And then it really grew from there. It really grew into, all right, now I want to go find more off-market properties. So I went and found a lead manager, somebody who could set appointments and manage all my leads. And then I went and found more people to help me on my sales team to actually go find the deals, cold callers, texters. And kind of the last component was, all right, now instead of using all these general contractors or third parties, like, let's bring guys in-house. And one of the biggest ones is bringing in a project manager, because I was wearing the project manager hat, and that's a very involved role, and you're constantly getting called, constantly dealing with headaches, and you can only do so much, and it was pulling me away from other parts of the business. So hiring a project manager who could manage crews was another big game changer that ultimately allowed me to scale and build these 3 different kind of separate companies.
Nice. I appreciate you sharing. It sounds like you basically built out a career and a life around being a petroleum engineer, and then at some point it kind of just stopped. Is there any kind of crossover between your old career and your old lifestyle with what you have now? Is there any connection there?
Yeah, I feel very fortunate for the opportunity I had to work in corporate America for over 12 years, and to see, there's a lot of systems and processes, especially I worked for Shell, and it was a very system and process driven company, to where at times it drove you nuts, but there was a reason why they did a lot. So one of the examples is just taking those processes and now applying it as we've started to grow our company, and have from like the the base level employees to supervisors to managers, and to build that structure and setting goals and reviewing goals and having KPIs, all these different things that I learned at Shell. It's been cool to actually now go apply that into my everyday job. And the second thing I would say is just all the connections I had working in oil and gas. I work with people in the field, I work with people in the office, tons of people that were working in oil and gas, making a good living, but they didn't have maybe the luxury of what I had in my job, where I was working in the field for 2 weeks on, 2 weeks off, or the desire to go out and figure out how to be a real estate investor. It's been really cool to have those connections and help those people now, because now I've since left the company, and even while I was still working at Shell, people saw what I was doing, and it's been cool. And it's not just Shell employees, it's like all the people I met while I was working in oil and gas and professionally, to talk to those people and show them what I've done. And then the cool thing is to give those guys opportunities to invest in real estate. Maybe it's me selling one of our properties turnkey. Maybe it's one of them being a lender on one of our properties, or maybe it's one of them actually being a limited partner to where they're actually owning a piece of property with me. It's been really cool to provide those people that opportunity that didn't probably have the time to go out and figure out how to be a real estate investor, but give them exposure to it. And it's a truly win-win, because I'm able to go raise capital and I'm able to do more deals because of these, and create these partnerships with all these different people that I had strong relationships with me. They knew what I was all about. They knew how hard I worked in my W-2 job. They saw how hard I was working in real estate. And it was just a really cool way where they felt comfortable. I felt comfortable working with them, and just creating a really cool win-win relationship.
Nice. So it sounds like the W-2 earners in your previous occupation and lifestyle get to participate in everything that you've built to date in real estate. And for those of us that follow you on social media, we've been hearing about a real estate fund and how that's a catalyst for people to be able to participate. Is that kind of what's next for 2024 in terms of rolling that out for your network and people wanting to invest and participate that don't have the time or the know-how?
You bet. I mean, so historically, I've been working with a lot of lenders and a lot of partners on a deal by deal basis, to where they would maybe go fund a deal. Or maybe they just go buy a deal, to where I'll find the property for them. I can use my contractors and I can manage the property, and I can just sell them the property. But not everybody wants to go through all that and put together the financing, be in charge of, be ultimately accountable for that property on a day-to-day basis. So the next big step was launching a fund to where I could do, because probably the biggest feedback I got from working with a lot of people and a lot of investors and a lot of people who knew me and knew what I was doing and want to be a part of it, they're like, well, I just want to somehow be a part of what you're doing, Casey. I want to have a little piece. I want to buy into your company, or I want to do something to see where I could get a real estate exposure, but really, and get exposure to what I was doing. Again, we talked about how I was finding the deals, fixing them up, and doing property management. Like, we had such a vertically integrated company to where they wanted exposure to that. So the best way we've designed for people to get that exposure is to invest in our fund, where now they are a limited partner. They have equity. One of the biggest keys is they get the depreciation. So being a private money lender is a really simple, easy way to invest, and I love it. We will always have a need for that. But one of the main differences between that and a fund is, in a fund, you are a part owner. You have equity in the deal. So now you can go get the depreciation and all the tax benefits that all other real estate investors get. And you also get appreciation because you're owning the asset, you're getting the upside. So it's a really cool way to give people all the benefits that I get from real estate. Now, just any average person that has a good and they don't have to have, but typically this works really good for high W-2 earners to be able to get real estate exposure, but not have to go figure it all out. They could just invest in the fund, get all the exposure, get all the tax depreciation, get all the appreciation of the property, wrap that all up, and get all the benefits of real estate.
That's awesome. So you're talking about the benefits of real estate, but can you share a little bit about the actual deals that you're providing in the fund, so people know the security back behind the investment they're making?
You bet. So the beauty is, we have a lot of deal flow, right? We have single family flips, we have duplexes, small multifamily, and then even some large multifamily properties. So, and then the other caveat too is, sometimes we finance that with a small bank, but as of late, because of interest rates, we'll go finance a lot of those deals with seller financing, or we'll take over somebody else's mortgage and make the payments. So those are all the different types of deals that we have coming in. But with our fund, and again, we have different opportunities, but you could be an investor on a single family property. You could invest in a large multifamily property. For example, last year, when we were first starting off our fund, we had this large multifamily property in Casper that we were rolling out and about to take over. I ended up taking that down with a partner that I had a great relationship with, who had already invested on a couple deals, and he got a phenomenal opportunity. And that, honestly, that's one of the best properties and best assets we've put together to date. And I'm really excited to go put more of those deals together, because these large multifamily deals, what I found is, not everyone can go take down a deal like that, right? It takes more capital, it takes more bandwidth, it takes more property management, it takes construction and teams. Not everybody can put together a deal like that. But we now, because of the team we built out, we can do that. And the other thing I've noticed is, especially in Wyoming, and it's just true in a lot of markets, there's a lot of these multifamily properties out here that have been owned by the same owner for 10, 20, 30 years, and they've realized a lot of value, but those owners are not incentivized to go continue to maximize the value of that property. And they don't want to go do a complete renovation. They don't want to turn over a bunch of tenants and try to maybe go up to market value. But that's been one of our really niches of our teams are really good at that. We've done it on a 14 unit in Laramie, Wyoming. We're now doing it on a 63 unit, to where we can go in and recognize these properties they're very much under market rent. They're not, they haven't been updated. They're in disrepair, but we're able to quickly recognize that. And then we can go and execute it with our team to fix all those properties up. But to take that deal down, it's difficult to take it down as an individual or just in one LLC with one member, right? Those are the perfect deals to take down with a fund and give these limited partners or these other people who have a solid W-2, let them invest on that deal, because those deals have, the only maybe big difference between that and what we've been talking about when you're like in a one-off deal is you're gonna put your capital to work for several years, but you're gonna get the long-term gains that real estate offers. You're gonna get the depreciation we talked about. You're gonna get the appreciation, and you're gonna start to create that long-term generational wealth that a lot of people are looking for.
That's awesome. So obviously being a petroleum engineer, you've got connections with people across the country, even internationally, but primarily in Houston. But the deals that they have access to aren't in Houston. Where would you kind of describe the environment of these deals and why you enjoy and are passionate about investing in the part of the countries that you market to?
You bet, yeah. I've got connections across the country and across the world, as you say, in a really concentrated group in Houston, Texas, right? But what I love and what a lot of my investors love, whether they're in Houston or wherever it may be, I'm giving them exposure to a different market. One of the favorite things I like to share is one of the investors I worked with in Houston, he goes, what I like about working with you, Casey, is I'm in Houston. I could go find tons of different guys that invest in Texas and are doing multifamily. There's a lot of people doing that, right? And I'm investing in Texas, but I want to get exposure to another market, but I don't necessarily want to go move or learn all the ins and outs of that market, but I'm able to get access to you and know you who has access to these other markets in Wyoming and Montana, these other thriving markets that do offer different things that maybe the Sun Belt does, maybe Texas does, maybe Florida, wherever you're investing, right? It's a different market with different exposures. And a lot of these investors really like the fact that they can get exposure to that market and just really diversify, right? Everybody wants to, that's what you do in the stock market. You want to diversify where your investment's at. And these people are able to get that. But I think the key part is they get to do it with someone they know and trust. With me, like we've got a relationship, they know what I'm all about. They've been seeing what I've been doing. And they don't have to go just randomly go find a general partner or a fund that invest in Wyoming or Montana or wherever it might be. They're going to go invest with somebody they know and get exposure to another market.
That's awesome. So you've obviously shared about the deals, you shared about the businesses that goes out and find the deals and allows people to invest in, and even the markets that you're able to find the best deals in. Can you share a little bit about maybe 0 to 1 on how people can invest in the fund and have access to these deals? And maybe it'd be beneficial to start in the investment size you typically start people off of, or what's a good sweet spot for people to kind of allocate funds to really see the gains that you're talking about?
You bet. I think that's the first question a lot of people ask is, how much do they need? What's the initial investment? Right? And we've kind of gone back and forth this a lot. Like a kind of general rule of thumb is $100,000, but we aren't firm on that, right? If we have somebody who's only got $25,000, and that's what they're comfortable with right now, but they would love to invest more later as they develop more comfort and see more deals or are a part of more deals. We'd love to take those people on, because that's just, again, a lot of people, that's where they're comfortable starting. So I try to attract more people, because I think there's a lot of funds out there that will only take you if you've got 100,000 or 250,000. So first off, our minimum is lower, and all it really takes to kind of answer your question of next steps is like reach out. I would just love to get on a phone call with them and understand what are their goals, how much are they wanting to invest, for how long do they have because there's a lot of people that might have a window of like, hey, I've got some liquidity for the next 12 months. I'd like to put it to work in real estate. Well, we've got a bunch of good options for that. Or maybe it's like, hey, I've got $25,000 or $50,000 now I want to invest into real estate, and then I want to be able to add to that over time, and I want to keep it in the real estate market. I want to get the long-term gains and get that long-term generational wealth through real estate. So I want to understand what the person's goal is, and then we can really figure out, okay, where does it make sense for you to invest? Is it in this fund, or is it being a private money lender on a one-off flip where I can return your money in 3 to 6 months when the property sells? But I like to understand that so we can make the right recommendation. And then it's really you just being comfortable. I mean, as far as the documentation, we share like our PPM and our different legal documents so they can understand the disclosures of the deal. And we'll walk them through. Often we'll have a one-pager prospectus on the specific deal that we might be offering and share them with that. But ultimately, once they're comfortable, it's very simple. You'll be able to work with our kind of back house team and our administrative team, and they'll handle it from there. And it's really simple. The key part is understanding what their goals are and making sure we align with that and making sure they're ready to actually go invest. And if they're ready, the rest is easy.
That's awesome. So you've talked about a lot of your investors and financial partners that back these deals come from your internal network, whether it be from your past experience in corporate America, or maybe your kids' sports teams, things like that. Is this going to be open just strictly to people in your network, or can accredited investors that maybe just be finding out about you and the markets that you operate in, do they have access to it as well?
Absolutely. It's really all the above. And again, historically, I've worked with a lot of people who knew me, and we had a relationship, right? But yeah, we can now, like, if you're an accredited investor and we don't have a relationship, I just want to get to know you and see if this is a good fit. But absolutely, just because if somebody's watching this video and they haven't met me before and they're like, oh, well, can I schedule a meeting to talk with Casey about investing? Absolutely. I would love to talk to those people and understand their goals and figure out what they're trying to accomplish. Because, yeah, it's not like it's limited to my close friends and close family. Absolutely. I mean, that's really how we want to grow and scale and do more deals and take down more bigger multifamily projects, or do more seller finance deals and take advantage of the current interest rates, where interest rates are high and we can take over loans or do seller financing deals. To do that, I mean, the thing about real estate and the thing about buying and holding and fixing and flipping, it's a very capital intensive investment, versus if you want to just be a wholesaler, you can have a lot of transactions and you can make good income. But to really be a good buy and hold investor and really build a portfolio, it's very capital intensive. So it's great to have people who want to be in there for the long run, or really looking, whose goals align with me to where they want to create long-term generational wealth through real estate.
It's awesome. So it's great that it's open for people in your network, people outside your network, people that have maybe, 6 figures that they can put into a deal that you normally taken down on, or if they don't have that much capital, they still have access to the multifamily deals that you bring to the table. If you don't mind, you've been in the industry for over 10 years investing in real estate, and now you're launching a fund in 2024, which is an election year. Can you tell us a little bit about your outlook on the market and why this might be a good time for passive investors to invest in something like your fund?
You bet. Yeah, I mean, it's always a good time to invest in real estate. I don't think you ever have to time the market. But I'm very optimistic where we're going in now, because we're still seeing in the market, and again, I see this every day because I'm investing, or because I'm talking with sellers. Like, we have leads coming in that I'm negotiating with every day. And over the last 6 months, I'm seeing way more motivation in sellers. And the reason is because interest rates have been high and there's not as many buyers in the market. It's creating opportunity, but I can already see that kind of a soft landing, and no one knows what's going to happen. But what I see in 2024 is rates starting to drop. Inventory is still so low. We never saw a correction in a lot of our markets because of the lack of inventory, right? Even though rates and buyers got all knocked out, buyers were knocked out because of rates, there was still such a limited supply of inventory in the market, we really never even saw a dip. So I really believe we're about to see good appreciation again. I mean, if interest rates drop, all these buyers that have been sitting on the sideline are going to be back in. So I'm really bullish and really excited to go buy properties now, because if we wait, like some people are, they're going to wait for interest rates to drop. If you do that, it's going to be too late, and it's going to be like we're going to be right back where we were a couple years ago with bidding wars, multiple offers, having to offer way over asking price to get deals. So right now, we're putting the deals together right now, we're going to underwrite them. They're still going to work right now in today's interest rates. And then if they drop interest rates, that is an incredible amount of value that we just created, not only in the value of the property, but in the cash flow. I think we're in a really great window right now to go out and acquire properties.
So you mentioned that you're actually on the calls with property owners, single-family residents, like single-family homes, houses, and multifamily commercial properties. You're actually talking to these owners and seeing what options are you for to acquire that property. It sounds like you have a pretty good, basically a finger on the pulse of the market each and every day, especially if you're underwriting these deals specifically. What are some kind of ways that you're able to take these on to mitigate your risk as an owner, investor, and operator, as also the investors you work with? Are there any kind of ways that you're seeing you can acquire these properties to mitigate your risk long term, regardless of what happens on a macroeconomic level?
You bet. I mean, and again, we had to pivot, right? When interest rates went way up and a lot of buyers dropped out of the market, it became harder to fix and flip properties because there weren't as many buyers. We didn't have the bidding wars, and you couldn't just go do a not great job on a fix and flip and sell it no matter what. We had to A, refine our fix and flip company, but B, we had to really dive in and really lean in to creative finance. Creative finance is probably one of my biggest passions. One of the things, when I'm talking to a seller, I love talking about it because we just understand the seller's needs and what is their problem. And often the solution is creative finance. And to answer your question, creative finance is a great way for us to mitigate risk. I don't have to go out and borrow with a bank at 8 or 9%. I can actually take over a seller's loan, or maybe the seller owns it free and clear, and I can get them to finance part of the property. That's been a great way for us to continue to acquire property with favorable terms, and it kind of gives us some runway to where when eventually your interest rates should come down. Nobody knows when, but it allows us to continue to buy properties now, not go and take too much risk on a deal where maybe there might be some deals that just don't cash flow right now at 7, 8, 9% interest rate, but there's a lot of deals that still cash flow at 2 or 3 or 4% on these loans that these sellers took out several years ago, or a seller who's okay getting 5% on that property they own free and clear. So that's been one really good way we've mitigated risk. And the second way is partnering with our sellers, especially on a lot of our fix and flips, where we'll tell our sellers and say, hey, right now is not a great time to list. And if I give you a cash offer, I have to be very conservative, and it's going to be very low, and that number might not work for you. But what we could do is we could set up, it's basically like a partnership with the seller to where we're going to go in and fix it up, and then we're going to sell the property, and that seller's going to get paid when everyone gets paid. And the cool thing is we're on the same side of the table working together. And the cool part about the other layer of that is an investor, often we'll work with an investor or a limited partner to come in and fund that deal, because we still need to fund the rehab. Because a lot of times these sellers, they can't, if they had $50,000 laying around, they would go fix up the house and realize the full value. The fact is they don't have that. So what we'll do is we'll bring in a limited partner, we'll combine it with a loan in place that the seller already has, that's low interest, low risk. We'll combine that with a limited partner or private money lender's money. We'll fix up the house, and then when it sells, first off, we'll pay off the first position mortgage, we'll pay off the private money investor, and then myself and the seller will split anything that's left. And that way we're really de-risking things to where the investor is protected, because we're buying the property at a good enough discount to where no matter what, the loan's going to get paid and the investor is going to get paid back. And then again, like I said, at the very end, whatever's left over, myself or my LLC and the seller, I will split what's left. And that's a really good way to mitigate the risk in a high interest rate environment.
We're actually filming this Fireside Chat in Billings, Montana, where you were a quarterback here at the college. If you were going to give us our play as our quarterback here in investment in real estate in the fund, what would that play look like for people who want to be a part of the team?
So here's the play and the simple execution of it. our team is going out and finding these deals. Again, we have an acquisitions company talking to sellers, myself often talking to these sellers every single day, getting deals under contract. As those deals become under contract, they can be acquired and taken down by a real estate fund. So that's where you come in as a limited partner, as you come in and you invest in our fund that is acquiring and buying these deals. And then when this property sells on a flip, we realize the profit and we distribute funds. Or when we go, maybe we buy this, fix it up and hold it as a rental property. Well, now you just get the distributions based on the cash flow of the property. And then in maybe 3, 5, or whenever the exit is of that property, that's when you're going to realize a significant amount of income, because that's when we're going to realize all the value add we did, all the appreciation. And then again, the kicker I keep talking about is the appreciation. In the meantime, you're going to get all those write-offs potentially in your tax return and be able to ultimately participate with us on a deal. So again, we find the deal, you come in, bring your money, and then we go acquire the deal, we operate it, and then at the end of the day, we sell the property and we all realize the profit.